This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome. Yay. It is Friday. It is Friday, July 10th, 2026. Carol Massar, along with Isabel Lee. She is in for Tim, who is kind of getting near the end of his vacation, but he'll be back on Monday. But we are great to have you. Great to have you here.
I'm excited. I love the show, as you know. I really love joining you and Tim each time I can get. And it's shaping up to be such a busy day, closing out also a very busy week.
Yeah, a lot, especially in the tech world. And that's where we're going to kind of kick things off. Our own Ed Ludlow settling in here in the studio. He caught up with the chairman of SK Hynix, of course, that one making its U.S. debut, trading here right now up about 15%. So we're going to get into it. The significance of that listing and just SK Hynix, its role, especially in the grab and demand when it comes to memory chips. We're going to get to that. Overall market, a little change, but we'll get an update for you in just a moment, kind of a slow crawl to the weekend. This is a story that I've been a little obsessed when I was reading still in my jammies, having my coffee this morning. President Trump firing 2 Democratic members of the U.S. Election Assistance Commission. So I want to get into what we need to know about that.
And the rationale behind it and what it means moving forward, definitely.
Yeah, exactly. All right, so we're going to get into that. We've got a view from the C-suite and also really on AI with Chris Stansbury. He's president and CFO over at Lumen Technologies. They just completed a deal this week related to AI workloads. So we'll get into that. And then we're also going to talk a little bit of soccer. We've got a great guest and some significant news when it comes to women's soccer right here in New York. So we're going to get to that in just a moment. First up, though, let's get an update on the trading day. Let's turn things over to Charlie Pellet.
All right. I thank you very much. And here's what's going on. The stock everybody wants to know about, that is SK Hynix, right now trading at 171.45, out the gate at 149. Bottom line here, looking at a jump of roughly 15%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever American listing by a foreign company. Meanwhile, some headlines out of SK. Its CEO says the memory chip shortages that are roiling the computer, car, and device markets will probably persist beyond 2030. The key takeaway, though, first day out, we do have SK Hynix shares up by 15.1%. The Dow, the S&P, NASDAQ all advancing very close to session highs right now on the S&P. You run the GIP screen on the Bloomberg. You can see right now we got the S&P at 75.67, up by roughly 0.3%. The Dow also advancing up 138 right now, up 0.3%. NASDAQ higher by 65 for NASDAQ, a gain right now of 0.3%. Key takeaway at this hour, we are on track for a second week of gains, back-to-back gains on the S&P 500 index. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up right now by 0.4%. The VIX holding just above 15, and your 10-year 4.56%. Gold down $22 the ounce to $41.01, drop there of 0.5%. West Texas Intermediate crude down 1.1%, $71.27 for a barrel of WTI. Again, recapping here, the Dow, the S&P, NASDAQ, they're all advancing. S&P 500 index up now by 0.3%, and SK Hynix up by 15%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. All right, Charlie, we'll be back to you certainly throughout the hour with an update on the trading session. Hey, we have, safe to say, been counting down to this all week. We're talking about the U.S. listing of a giant maker of memory chips. We're talking about SK Hynix. Happened today. It raised $26.5 billion in its American Depository Receipt offering. The South Korean chip maker powering through really what's been a volatile market, certainly in its home market, to deliver the largest ever U.S. first-time share sale by a foreign company. I feel like I should bring in Ed Ludlow first before we go to some sound from your incredible interview. Everybody in the newsroom was watching. He is, of course, the host of Bloomberg Tech on Bloomberg Television. Ed, this was a big deal.
It was a big deal, not just because of the record that you outlined. Okay, the biggest first-time US share sale by a foreign company The last, by the way, was Alibaba. So like that gives you a sense of the
right?
tech company they're in. But like with what's happening right now in the landscape for semiconductors and memory chips, you know, SK, it's an eye-watering number, 26.5 billion, but SK Hynix is so capital committed in Korea domestically and around the world. We can get to the US part of that actually in the scheme of things, 26.5 billion is small. It was as much about getting in front of Americans. You know, that was a part of the conversation. Like they want the American talent, the American investor. There's a sense that, you know, the US knows about AI as good as anyone does. And so SK was super conscious of that. It's a multifaceted ADR listing.
And you had an interview at the floor, and it was very exciting, and it seemed like they have such big plans for the US. To your point, this is really about planting a flag. But then we also had a recent headline that says they might expect a chip shortage to last into the next decade. So how do you square that?
So literally what happened was I spent about 40 minutes with SK Group Chair Tae-won. SK Group is the parent company of SK Hynix, as well as others like SK Telecom. SK Hynix has its own CEO, and Bloomberg News spoke to him just after I came out of the NASDAQ. First time he's done an interview, I believe, particularly in English.
Yeah.
And
amazing.
Maybe if I was a bit reflective on my interview with his boss, Chairman Che just didn't get his calendar out and mark the date that he sees this memory shortage easing. But the SK CEO, he definitely did. And so what he said was this goes way beyond 2030. Compare and contrast, I think Micron said 2028 is when you start to see supply catch up with demand.
That's a bit of a ways out, to say the least. So in terms of that demand, it's going to be here for a while. Let's get a little bit, though, for everybody. Let's share some of your interview with the SK Hynix chairman, Tae-won, catching up with Ed earlier this morning. Check it out, everybody.
The SK already invested in more than $35 billion in U.S. side. My plan is at a much bigger number. So
Bigger than 35
yeah,
billion.
well, much bigger than 35. I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has set some settlement with the AGI. Then, well, I guess that that's a kind of normalized at all the cycles. But anyhow, that until then, well, we need that a lot of memories.
And that, of course, was SK Hynix chairman Tae-won catching up with Ed Ludlow. An in-depth conversation. Highly recommend everybody kind of check it out on the Bloomberg or at Bloomberg.com to listen to all of it. You know, Ed, I think I've asked you this before. I can't tell whether something like this is a sign of a top or it's also a sign of artificial intelligence. What's happening here is a global thing. And the significance of this listing here, like I'm trying to put it together.
I mean, it was a more than 30-minute conversation, but hat tip to the editor. That was a pretty good supercut because we covered so many things. And like, you know, on the I think what you're asking about in the first is like about...
I think that might have been our producer, Talia, who did that.
Super good, you know, and it, on the issue of a bubble, right, I think, and threading together all of that, I think, you know, the main point is that he is saying, based on our customers, the buyers of memory chips, we see the world working out as follows for the next several years. Something right in the middle there, so important that was picked out. Supply may never catch up with demand. So there will be this imbalance forever, which is kind of difficult to get your head around when you remember that memory markets typically have been cyclical, boom and bust. That largely related to consumer electronics, not data centers. Yeah.
What has to happen for that demand to maybe be in perpetuity, dare I say?
Yeah.
Like what's on the user's end has to happen for that?
Well, okay, so the state of the world right now is that lots of data centers are being built. There's still a mix between those data centers that are being used for training AI models and those that are being used to run the models in the phase known as inference. But at some point, inference becomes a lot more of the market and the memory requirements are different. I don't know if I'll get in trouble or not, but we're talking about this tiny little thing for those watching on television and YouTube. This is a high bandwidth memory chip. It is 12 layers, about the size of my fingernail. It's about 12, this is literally 12 layers of DRAM.
Right.
DRAM goes in lots of places, not just data centers. So right now, what's exacerbating this market is that there are competing forces. It's not just AI.
Right.
It's that consumer electronics need DRAM. DRAM pricing, by the way, it's kind of commoditized still. It still goes way, way, way up. the irony is right now the PC market, the smartphone market are a little bit depressed because of the high price of memory. And the high price of memory is all because the demand from data center is so great. And so like it's a multifaceted equation.
I love that you brought that. I've never seen one in real life, so thank you. Maybe can I have it? I'm kidding.
No, I mean this is a sample, but this thing thousands and thousands of dollars. Sure. You know, so I'll put it under the mattress for a rainy day.
Yeah,
good.
Exactly.
That's a good investment. You sat down with Tae-won. He's the chairman of SK Hynix. What was your sense when you were talking to him? We know that they're rivals like Samsung and Micron.
Yeah.
And they're getting better and better in high bandwidth memory. Can SK Hynix keep
again,
up?
This is a high bandwidth memory chip. This is HBM4E, the 4E generation, but it is 12 layers of DRAM. And specifically in this market, HBM, SK Hynix has 57% market share. So Samsung is the much bigger beast in memory overall. It includes DRAM, NAND, flash. So SK's that was a technology breakthrough for them, a technology decision. I asked him, can you catch up with Samsung?
Yes.
The guy paused and he was like, and he looked me in the eye and said, and literally said, I am not going to answer that question. And you know, to him, he's not accountable to Samsung. He's accountable to, I think he said, his stakeholders, his investors and his customers. Yeah.
To be continued.
Sure.
I don't even want you to go back home, but I know you have a lovely family that you need to, and an adorable little boy that you need to go home to, as well as a wife. So, Ed, you gave us lots of time, great interviews, good coverage, incredible coverage. And like I said, everybody should check out his interview with the SK chairman. Be well, safe travels home. Ed Ludlow, of course, the host of Bloomberg Tech on Bloomberg Television. You can catch it at 11 a.m. Wall Street time on Bloomberg Television. All right. Big day, certainly, watching tech, and we'll continue to do that as we count down to the close. Got to get to, though, something that is definitely on our radar, and that has to do with President Trump firing 2 Democratic members of the U.S. Election Assistance Commission, an agency charged with helping state facilitate accurate elections. And the Republican member resigned, a White House official said. That would happen late last night, or last night, I should say. Hey, reporting this out is Bloomberg News White House and Washington correspondent Jeff Mason. He's there on the White House North Lawn. Jeff, dying to get to you. Feels like a big deal. Is it a big deal? Walk us exactly through what the president did last night. And can he do this? And do other presidents do this?
First, yes, it's a big deal. And yes, he can do it. And he can do it in large part because the Supreme Court just paved the way for him to do that with its decision at the end of June in the Slaughter case, which allowed him to fire a member of an agency, even independent agencies, because he is the head of the executive branch. And that Supreme Court decision upended decades of precedent and handed more power to this president and to his successors. And the White House official who I spoke to last night confirming this specifically mentioned the Slaughter decision when saying that the president had the right to do this and had decided to do so in part because he didn't feel, in relation to the Democrats, it sounds like, that they were committed in the way that he wanted them to be to rooting out election fraud. Really important asterisk to put next to that right now, of course, is that the president has been claiming falsely since 2020 that that election was fraudulent, and he likes to paint the entire electoral system in the United States as fraudulent when that evidence is simply not there. But this is another example of him using now that new authority that he has to tackle elections in a way that other presidents have not.
What is the responsibility of this commission? For those folks, who might be listening, watching, who don't really know, tell us what the responsibilities are, the actions that they do when it comes to elections.
So my understanding is that they help states. Elections are run by states. So this is an organization that supports states in that and in accuracy and in just basically supporting them in the electoral process. And there are multiple organizations and a few other agencies that help with that. I have to confess, this one wasn't super high on my radar, which also makes it still interesting because it was apparently on the president's radar. And could this be a foreshadowing of more firings, of more action against agencies that are involved in elections? TBD.
In your reporting, did your sources indicate whether this decision was made by President Donald Trump himself, or was it driven by White House staff or legal advisors, or does it even matter?
everything is driven by the president. So this is he makes decisions on firings. Obviously, there are staff around him who can advise him and who he can seek counsel from. But the president drives the train from the White House. And I've covered multiple White Houses, and I think it's fair to say that this one in particular, President Trump is involved in all of the decisions. And this is not something that could have been done by a junior staffer or by even a more senior staffer. This is something that came directly from him.
Yeah.
I'm confident in that.
Jeff, safe to say the midterms are definitely on his mind. Will he drive the train in naming new members to this commission? If he doesn't, I don't know, what does that mean for the midterms? As you said, very much, done by the states, but I'm just curious how we should think about that. Is there no oversight, an important oversight group missing?
Well, again, good question, and I don't know the answer to that as to whether or not he's planning to nominate new members for the commission. As you rightly said, it's not just the Democrats who left, but also a Republican who left. So it's empty now, and if they want it to be filled, then he would need to fill it again. But this comes at a time, as you well know, that the president is also pushing really hard for this Save America Act, which would also clamp down on mail-in voting and require proof of citizenship for voting. So it's just one piece of a larger set of actions that the president is working on to impact elections. And his critics would say largely to try to give himself and his fellow Republicans an advantage, both in those midterms and in the 2028 presidential election and elections after that as well.
And again, we should, as you did, rightfully so, Jeff, point out that there was no fraud, and there was a lot of investigations and work into that to show that there was no fraud in the 2020 elections. Having said that, I got to ask you about the Middle East. Peace talks going on. What do we know? I'm not quite sure what to think about. What is the right narrative when it comes to what's going on between the U.S. and Iran? War, peace talks? I don't know.
I'd rather you ask me about the Middle East than DRAM. I was listening to your previous conversation.
Hey, that's next.
Like, I'm glad I'm not in on that one. The Middle East is always a huge topic here, and has certainly become an even bigger one again in the last few days after the fighting started again between the United States and Iran. The president gave mixed messages during his press conference in Turkey when he said, during a couple different press conferences, I should say, and in one of them he said he didn't want to deal with Iran, but then a White House official told me last night that technical level talks are continuing between the United States and Iran, even as we were just saying that there were strikes from both sides this week. So it's a little hard to parse here. The president clearly, trying to thread that needle between wanting a peace deal and wanting to end this conflict, particularly because of the political and economic ramifications that it has created for him and his party, but at the same time showing offense at how he felt Iran was treating the U.S. And not respecting the terms of that memo of understanding that led to the ceasefire in the first place.
Figuring out the Mideast for me is DRAMs to you, Jeff. I'm just going to say.
You got it.
I can't figure it
out. Totally.
Be well, my friend. Good to check in with you. That is Jeff Mason, Bloomberg News White House and Washington correspondent there on the White House North Lawn. When we come back, we're going to get a view from the C-suite, kind of timely with corporate earnings kicking off next week. Lumen Technology CFO is going to be with us.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks holding close to session highs. The Dow, the S&P, NASDAQ very much in the green. SK Hynix, the ADRs in focus right now, looking at a gain of 13.5%. The ADR is surging above their offering price after the company raised $26.5 billion in the largest ever American listing by a foreign company. Again, SK Hynix up now by 13.5%. The Dow, the S&P, NASDAQ higher, as I mentioned right now. Stocks higher in the countdown to earnings season. S&P 500 index up 24 right now, 75.68 where we stand. That is a gain of just about 0.3%. 0.3%. Dow Industrials up 163 on the Dow, gain of 0.3%. Nasdaq Composite up 63, that is a gain of 0.2%. On an update for much of the market, small caps are declining. The Russell 2000 index of small cap shares down now by 0.4%. The SOX, the Philadelphia Stock Exchange's semiconductor index, a little change now, up by about 0.1%. We've got the 10-year currently yielding 4.56% with a 2-year 4.21%. Gold is down $21 the ounce to $41.03. The precious metal now lower by 0.5%. West Texas Intermediate crude down 1.1%, $71.24 a barrel on WTI. Earnings news: Delta Airlines lower after earnings. The carrier did reaffirm its full-year guidance, saying there is strong demand for premium, corporate, and international travel. Delta shares down now by 2%. United reports next week down 1.8%. And American the week after that, it is down now by just about 1.9%. Briefly, EasyJet says it has received an offer from private equity firm Apollo Global Management that will beat a private rival proposal from Castlelake, now in the UK. Apollo offering 715 pence for EasyJet. Again, recapping here, S&P 500 index up 25, gain there of 0.3%. SK Hynix up 13.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Isabel Lee in for Tim Stenbeck this week. On a day when memory maker SK Hynix debuts in the U.S., and we're nonstop talking about the AI build, the AI spend. It is the major narrative again this year. Our next guest is a great get, playing into the broader narrative of AI and next steps for it. We were talking about Lumen Technologies. Just this week completed its acquisition of Alkira. I hope I'm saying it correctly. It's an on-demand networking platform that helps enterprises connect clouds, partners, and AI workloads. So we're excited to talk to the CFO and president, Chris Stansbury, over at Lumen Technologies. He joins us from Denver. He's featured in this week's CFO Briefing newsletter, which will be out from Bloomberg this weekend. Also with us here in studio, she puts us all together, Nina Trentmann, Bloomberg News senior editor. She's editor, too, of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing. Chris, Nina, of course, Nina, great to have you back. Delighted. Chris is with us. Chris, I want to kick it off with you, if we may, and get this going. You did just close this acquisition of Alkira, and forgive me if I am mispronouncing. Tell us what's the rationale for this transaction. What does it give you?
Yeah, and you got the pronunciation right. It's really revolutionary in the networking space. If you think about historical enterprise networking, it was point-to-point connectivity. It was very commoditized and, frankly, very clunky and hard to consume. And when you think about an AI-driven world, it's not just about connectivity from your company to the cloud. That's what we would call north-south traffic. It's really now rapidly becoming the need to move traffic and workloads between clouds, or what we would refer to as east-west traffic. That's where the problem exists for enterprise today. And what Alkira brings us day one today is really the marriage of that cloud-to-cloud, east-west traffic with the company-to-cloud north-south traffic that Lumen already had. So it's really creating a new category at the right time.
Yeah, thanks, Chris, for joining us. I'm curious, could you talk a little bit about how this could impact your outlook as a business? I know that you spoke to investors earlier this year and provided projections for this year. Like, how does Alkira change the business case for you as Lumen?
Yeah, it really changes it tremendously. I mean, for a couple of reasons. When we laid out our financial projections at Investor Day earlier this year, we were planning on building that east-west capability, that cloud-to-cloud capability, which was going to take a couple of years and a couple $100 million to do so. When we saw what Alkira had to offer, which was that and more, we moved very quickly to acquire them because it brings us that capability today. So what we're doing right now is actually just on a meeting before this, is looking at the roadmaps, how quickly sales plays can be developed. And over the course of the balance of this year, we're going to be going hard at how we can accelerate our revenue. Now, a couple of just data points below that. What that means is we're not a telco anymore, right? We are not focusing on the legacy business. We'll have solutions for customers who use voice products, but that is being de-emphasized. The full energy of Lumen is going into the digitization of networking. The second thing is that since closing the deal where we can get teams in rooms, the early read is that what we've acquired is even more special than we thought. And so we're going to do everything we can to bring value to shareholders as fast as possible.
Your share price is down about 12% since the beginning of the year. What does that tell you? What's behind that drop? And how concerned are you also with investor concerns more broadly about AI frothiness? Do you expect to be hit by that?
Yeah, so I think there's a couple things. We're still valued like a telco that's underperforming. I don't think the market has really looked at the fact or realized the fact that over half of our revenue is in this growth area, and Alkira only supercharges that. So I think with time and education, that fixes itself. As it relates to the AI volatility, there's a lot of talk about a bubble, and candidly, we're just not seeing it. If you go back in time, when the predecessors of Lumen, Level 3, for example, built these big networks, they were building them at the time the internet was coming about, and really that was a solution looking for a problem. This is the exact opposite. The problem is real, where data volumes are exploding. The data is getting further and further away from where companies need to access it. They need to quickly move that data to where workloads can be processed on GPUs. And throw in energy constraints, which only make that more complicated. Am I sending the data to the right place? What we have in Alkira now is the nervous system, if you will, of AI, and that's needed by whoever the winners are going to be. So who the winners and losers are is less important to us. We are deeply ingrained in a lot of the AI infrastructure that exists today, and the capabilities that we now bring to market allow enterprise to program it in a programmatic way, manage their networks, which has never been able to happen before. This is gonna turn networking upside down.
So, Chris, you mentioned AI. When do your AI investments start translating into earnings growth? Because your valuation has rebounded, but your EBITDA is still expected to decline this year.
Yeah, actually, our EBITDA will inflect this year. That's a commitment that we've made to the street. It's not a huge inflection because we are still managing that legacy base, but it will grow from there. And we expected at the time of our Investor Day revenue to inflect in 2028. Again, the work that we're doing right now between now and the end of the year to accelerate that will inform, if we can pull that forward or not. But the early indications are we can. So it's starting to show up. The big builds that we did with the hyperscalers are 20-year agreements. So that revenue is slow to move in. Those projects are on time, well underway, and bring great margin to Lumen. The thing that we're not going to chase is a bunch of new build it and they will come builds, because there's just no return in that. Our focus is really on monetizing the soon-to-be 58 million fiber miles that we have in the ground from 12 just a few years ago, and really unlocking the network in the cloud, bringing things like firewalls and zero threat and load provisioning in the network fabric itself. So the opportunity here is for enterprise to really have the easy button for network consumption and not have to engage in co-location facilities and firewalls and a whole bunch of complex equipment wired together to make networking work. That's where this goes from here.
Thank you, Chris. Just wondering, you also, of course, closed an acquisition, a sale earlier this year to AT&T. You brought in over $5 billion, selling your consumer business to them. You improved your finances quite a bit since then. You restructured debt earlier, but you also at the time axed your dividend. What's your message to investors with regards to the dividend going forward?
Yeah, really the message is this is about growth. And every resource that we have is focused on growth right now. And we see lots of opportunity to invest those funds in an ROIC manner that is very accretive to shareholders. So that's our focus. But again, I want to just touch on what you just said. What allowed us to acquire Alkira and really revolutionize enterprise networking is all of that restructuring, selling non-strategic assets, recapitalizing the company, fixing the maturity curve, going from 3 credit entities to 1, so we have alignment across all of our investor base. It's been an enormous amount of work, and Alkira was really that, as well as the adoption of our network as a service product, are really the first indicators of where we're going, and we're just getting started. So we've moved from defense to offense, and here we go.
Chris, just got about 45 seconds left here. I want to go back to where we started, talking about the closing of Alkira. You also closed the sale of your consumer business to AT&T. So any other deal making to further build out what you call the nervous system of AI? And again, just got about 45 seconds.
Yeah, we've got a lot to work with Alkira already. And again, as I said, we're finding more and more in that. But we will certainly look for things that expand that footprint and keep our lead in place. We'll also look at options around the legacy business and continue to do that. We have been doing it. But as I said, we're de-emphasizing that. We're really focused on the new way of networking.
Well, a super perspective, certainly on AI. And I, too, from what you're talking about, are hearing a very different tone, not so much focus on the data centers, hyperscalers necessarily, but how do you, as an organization, kind of coordinate all that data that's across different offices of the company, if you will. Chris, great stuff. Chris Stansbury, he is President and CFO of Lumen Technologies. Chris joining, of course, our own Nina Trentmann, Bloomberg News Senior Editor of the CFO Briefing newsletter. You can subscribe at bloomberg.com/CFO Briefing. A new one is out this weekend. Check it out. For more coverage of CFOs, check out the latest episode of the Chief Future Officer series. There's one out right now featuring the CFO of Wayfair. I caught up with in Atlanta at their new 150,000 square foot store. Yes, indeed, their store. All right, we're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the green. S&P 500 index on track for a second week of gains. So far this week, up by roughly 1.2%. The big stock focus today, SK Hynix. Its ADRs surging above their offering price. This after the company raised $26.5 billion in the largest ever American listing by a foreign company. Right now, we do have shares, the ADRs, advancing 13.1% out the gate this morning at 149. Last price quote, 168.59. Again, a gain of roughly 13% on SK Hynix. S&P up 0.4%, higher by 27 points. The Dow up 0.3. NASDAQ right now up 77. For NASDAQ, a gain of 0.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 0.1%. The 10-year, 4.56%, with the 2-year, 4.21%. Gold now at 4,100 even the ounce, just ticking below that, down $24, down 0.6%. Crude WTI down 0.7%. West Texas Intermediate crude slumping 0.7%, 71.57 a barrel. Interestingly, though, the oil majors all higher right now. ExxonMobil up 0.4%. Chevron up 0.5%. ConocoPhillips up by about about 0.2%. Again, recapping, SK Hynix is advancing by 13.1%, the S&P up by 0.4%. I'm Charlie Pellet, Isabel and Carol. That is a Bloomberg Business Flash.
All right, much appreciated. Charlie Pellet there. Hey, against the back of the World Cup, something that caught our attention, and that is the Gotham Football Club announcing that the club will play their home matches at New York City's football club's new stadium. It's Etihad Park. It's starting in the 2028 season. The club's initial lease at the venue lasts 5 years, options to extended up to 15 years, according to some reports. That makes it the first women's professional sports team with a permanent home in New York City. And it is I do too. A major milestone that reflects a long-term vision of building one of the world's most iconic women's sports clubs. And we have some other news. Gotham also recently announced it signed one of the world's top women's soccer players in Australian striker Sam Kerr, playing for the club from 2015 to 2017 before leaving the NWSL to play for Chelsea in the UK. So there's a lot going on. Let's get to it, because with us is our own Vanessa Perdomo-Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She joins us out there in our Bloomberg newsroom in Princeton, New Jersey. Delighted to have two back with us. Carolyn Tisch-Blodgett, governor and lead owner of Gotham Football Club, National Women's Soccer League team, of course, founder and CEO of Next 3 Ventures. That's an investment firm in sports, media, and entertainment. Also co-owner of the New York Football Giants, a member of course, the Tisch family that has long owned the team. She joins us remotely in New York. Vanessa, I'm going to let you kick it off because, man, this is your world.
You know, thanks, Carol. And Carolyn, it's great to talk to you always about everything going on in Gotham. Next week is going to be a huge week, you know, kicking out in Queens for the first time with the Queens Classic. Almost 40,000 tickets have been sold already. 70% of those is first-time purchasers, which is I'm really interested to hear your take on why you think that is. Is it because of all the excitement of the World Cup? Is it because the World Cup finals in the market a couple of days later? Is it New York versus New Jersey? What is it for you, Carolyn, do you think?
Yes, well, it's so good to talk to you again. I really appreciate you having me on the show. So a few things. So yes, just to explain what we're talking about with the Queens Classic. So Gotham will be playing the first ever professional women's soccer game in New York at Citi Field on Wednesday night. That is a few days before the finals, as you said. And when we made the decision to play this game, we knew that we didn't have access to our current stadium at Sports Illustrated Stadium in New Jersey because they're having a watch party. But we said, you know, the World Cup is coming to New York. Everyone, all eyes are on soccer right now. We want to be a part of it. We want to lean in. And so we created the first ever Queens Classic. This will be our first time playing there. And as you said, the excitement, the momentum around it has been tremendous. So just to put so right now, as of this morning, we're at 38,000 seats sold. We set out to break the New York women's sports record, which is 28,000. So we are on track to beat that. And just to put those numbers in perspective, our average attendance when we came in as new owners 2.5 years ago was about 4,000. So to get a stadium almost full, hopefully sold out by Wednesday, full of 42,000 people all watching a women's professional soccer game, it's really part of the vision that we set out to from the beginning, but it's a bit of a pinch me moment when it happens.
Carolyn, we've talked a lot about how, you know, having the World Cup in this market, how do you capitalize on all the attention that's happening on soccer? Sounds like you're kind of doing that with the Queens Classic already, but how do you take those first-time purchasers and turn them into lifelong fans?
Yeah, absolutely. I think that is the goal of every team, every league. That is really our duty, is to take these national, global moments like a World Cup every few years and turn them into lifelong fandom. The Queens Classic is certainly part of it. But I'd say it's just the beginning. I think, you know, as you said, 70% of the people that are coming to the Queens Classic are first-time buyers. So now it is on us to bring them to, first of all, show them a great product, show them a great experience. So both the players on the field and the fan experience around it, and then bring them into the fold, have them understand, you know, you don't have to wait another 4 years to see World Cup soccer. We have many players on our team that are World Cup winners and World Cup competitors every few years. So that's really on us as team owners and league stewards to then bring that fandom back into the teams and leagues.
A lot of World Cup winners on your team, Carolyn. As we're talking about, you know, this year's World Cup and the US and the men's World Cup, do you think, you know, as we've spoken, you know, Did the men's team, in their departure in the round of 16, does that have any impact, do you think, on what you and other team owners were expecting to be a huge boom for soccer? Are you seeing any damper on that, do you think?
Yeah, obviously a disappointment. I wish I was on a plane to LA right now going to watch the U.S. team in a semifinal game, but I think we all do. But I think it doesn't take away from what this team has done for this country, I would say more globally. I mean, I think this country has never felt more united than it did maybe Monday afternoon before the game, or Sunday night rather. And so I think this, I think the team overall really brought this country together in a really special way. But when I think about it from a soccer perspective, people are continuing to watch. I mean, you saw the Mexico-England numbers, which was, separate from the U.S. game. So again, I think the World Cup is bringing in these moments of, bring in a casual fan. And then we then as team owners need to convert that into our fandom. But I don't think that changes with the U.S. out of it.
Hey, Carolyn, this is Carol here. I wanted to jump in. We announced in the lead about your guys' plans to play home matches at New York City's football club's new stadium. Why is it right to make this move, play in Queens starting in 2028? And I'm curious how it might, in your view, kind of expect it to maybe improve the business.
Yeah. So when we came in as new owners, really just 2.5 years ago, there was really a question of if this league was going to survive, if a women's professional soccer team could exist. Now the conversation is so different. Now the conversation is, what is the best possible venue for this team that has very large ambitions? Where is the best possible place for this team to play? And our decision was to move it to New York and play in Etihad Stadium, which will be truly a world-class venue. And so if I think about, when we came in as new owners, we said, there's no professional women's team that is really a global brand. There's no, when people say what their favorite brands, soccer teams, or when they say their favorite soccer or sports teams are in the world, they really never say a women's team. And our goal is to be that first team. To do that, we have to match the ambition of on the soccer side with the business team, and to be able to play in the greatest sports city in the world in one of the most beautiful venues that will ever exist. That is why we have to go play at Etihad Park.
And Caroline, we have just about 30 seconds left. Why is MetLife the right place for the World Cup final in your view?
Absolutely. We are so excited to be hosting the World Cup final next weekend. As I said, New York is the best sports city in the world. We will have, obviously, people will be coming from around the world to experience it, but they will get to experience every culture, every different restaurant, every different kind of all the creative options there are to do in New York. And I think you can only do that in New York.
All right, we're going to leave it there. Thank you so much. Carolyn Tisch-Blodgett. She's governor, lead owner of Gotham Football Club, founder and CEO of Next 3 Ventures, and of course, co-owner of the New York Football Giants. And I've just got to say, Carolyn, as a longtime Giant fan, I'm looking forward to the fall season. Thank you. And of course, our thanks always to Vanessa Perdomo-Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. Find it wherever you get your podcasts. Stocks on the Move when we come back. All right, everybody, we are back on Bloomberg Businessweek Daily. Carol Massar along with Isabel Lee. Quick check on the markets. S&P 500, 75.72, up almost 0.4 of a percentage point. NASDAQ 100 up 1/3%, up 101 points. I do feel like we're limping, crawling to the close.
We are, as am I. But for the week, we are on track for a second weekly gain, Carol. But I think that investors are just looking past any geopolitical headlines and just going straight into earnings the next week. Can you believe we're going to start with the earnings season?
I do. Again. Big banks next week. Kind of looking forward to it and curious what the C-suite has to say. I'm Carol Massar along with Isabel Lee. Let's get to some stocks on the move. Great to have here in studio Bloomberg News senior equities reporter Tatiana Darrier, and she joins us here. And you've got kind of an artificial intelligence trio of names. Tell us what you're looking at.
3 AI exposed names on the move today with 3 different stories, but we'll start with SK Hynix, the big story of the day, open at $170. It's been sort of swinging there. Now we're at $168, still above the offering price of $149. So we can still call it a success, even though it's lost some steam. And while ADRs typically trade below the common shares, which are traded and sold, we're seeing the opposite here. And that's because of some technical restrictions related to ADRs, but also because of the pent-up demand for chip makers, for memory chip makers in particular. So I think the 2 core messages from this listing is that first, the AI trade still has legs, and perhaps the wobble in chip makers was just temporary, and we are on the way to recovery. And I think the second one is that the market is so far absorbing all of this supply well. Remember, this was a key concern heading into this mega IPOs, and I think so far the evidence shows that we're handling it just okay.
All right, let's get to another name. Should we go to Oracle?
We can stick to the positive ones with Meta shares still higher today by 6%, and we attribute that today to some positive commentary and a price target raise from KeyBank Capital. Research firm Semi-Analysis issued a report saying that Meta models have the best chance to catch up to Anthropic, to OpenAI, and their analysts forecast the company will have more compute than both of these companies. I think the biggest story around Meta these days is that investors are starting to warm up to this idea that they're going to rent out compute as a business. Remember when the report first came out, that spooked the market, that raised concerns over capacity. What we're seeing now is that investors are saying, well, if they can really monetize and they can really boost those returns on AI investments somehow, it doesn't have to be through an AI frontier model. It can be through renting compute. Then perhaps we're okay with that.
Highly recommend everybody check out Kurt Wagner. A lot of reporting because he sat down with Mark Zuckerberg this week. But if anything with Meta, it is a company that pivots. We saw it when there was disappointment in the IPO because it wasn't embracing mobile. It went there. Talked about metaverse for a long time, then it backed off of that. Like, I do feel like it's very sensitive and nimble when investors and the street don't feel like they're doing the right thing.
Even if it's a gigantic company. The ticker stayed, though. It's still Meta.
It is still there, but we'll see. You're right. Yeah. Oracle.
Oracle. Well, let's go to the weaker parts of the AI trade. And this company got a downgrade from S&P Global Ratings to BBB-, still investment grade, but just a notch above junk. And the company has already somewhat been trading there, right? If you look at its CDS at 180 basis points. So the credit market is treating it as a sub-investment grade company. And analysts wrote they now expect weaker cash flows and that adjusted leverage will be above 4 times into next year. And that represents their cautious view on all of this infrastructure spend on the booming CapEx and weaker balance sheets.
All right, and a quick rundown of the tickers. Of course, SK Hynix is SKHYV, does not roll off easily. And then, of course, Meta, META, and Oracle, ORCL. That is some of your stocks on the move today. That is Tatiana Daré, Bloomberg News Senior Equities Reporter. For more conversation, check out our Stock Movers podcast. You can find it on Apple, Spotify, or anywhere you get your podcast. Tatiana, before you leave, you've got a great story. We've got about a minute or so. And it's talking about the best diversifiers to U.S. stocks are the least flashy. What'd you find out?
Well, there is actually a list of names there where investors could go to diversify U.S. exposure. But let's take a step back and think, why are we thinking about this? Well, SK Hynix today is telling us the AI trade is just fine, but there's also growing evidence that this trade is getting into its later stages. So that's why we need to start thinking about diversification if we look in the years ahead. And it's very hard to. It's never perfect. There's either, high correlation or low returns. There is value everywhere in the market if you look, even in the US, but you don't want to get into a value trap. So I set out some criteria. First is risk-adjusted performance. You need to get paid for your risk, and also correlations. And my top 3 would be India, UK, and Japan. And Japan with an asterisk because it does have a heavy tech weight. Right. So you are somehow betting on AI, but there's also another story there with financials, with the rate normalization. And that creates more upside for that market.
Head to the Bloomberg or Bloomberg.com and you can read all about what she just talked about and just get a little bit more information. Also see that list of 10 major global markets using MSCI data. Tatiana, thank you so much. All right, that's going to do it for the first hour of Bloomberg Businessweek Daily. Isabel and I are coming back on TV. The Close is up next.